Good afternoon, and welcome to Esports Entertainment Group's second quarter fiscal 2021 conference call. As a reminder, this call is being recorded and all participants are in listen-only mode. We will open the call for question and answer after the presentation. On the call today is Esports Entertainment Group's CEO, Grant Johnson, and CFO, Dan Marks. The company would like to remind everyone that various remarks about future expectations, plans, and prospects constitute forward-looking statements for purposes of safe harbor provisions under the Private Securities Litigation Reform Act of 1995. Red Cat cautions that these forward-looking statements are subject to risks and uncertainties that may cause their actual results to differ materially from those indicated, including risks described in the company's filings with the SEC. Any forward-looking statements made on this conference call speak only as of today's date, Tuesday, February 16th, 2021, and the company does not intend to update any of these forward-looking statements to reflect events or circumstances that occur after today. With that, I'd like to now turn the call over to Esports Entertainment Group's CEO, Grant Johnson. Please go ahead, Mr. Johnson.
Thank you. Good afternoon, everyone. Thank you for joining us for our second quarter 2021 earnings call. Despite unprecedented circumstances, I'm incredibly proud of how our team continues to grow and execute on our commitments we laid out in our S1 prior to our uplisting last April. The year 2020 has been transformative for Esports Entertainment Group and for the esports industry as a whole. Esports Entertainment Group currently sits at the crossroads of two growing megatrends right now, esports and online gambling. Gaming and esports have never been more popular than they are currently, with game streaming platforms like Twitch setting records viewership in 2020, with time watched up over 69% year over year. Gaming has become a new form of social network for Gen Zers and has brought people together virtually during this period when we've all had to be physically distant due to the COVID-19 pandemic. New console launches from Sony and Microsoft set sales records and continue to fly off the shelves throughout the holiday season. And according to the latest reports on Newzoo, there are now 2.7 billion gamers globally. And of those 2.7 billion gamers, almost 500 million of them are esports fans. Surveys indicate that over 50% of these esports fans would like the opportunity to bet on matches they're watching. And according to Eilers and Krajek, the esports wagering market is currently $750 million addressable opportunity, which we see growing to over $3 billion in the next 5 years. This is in addition to the player versus player, which is skill-based wagering market that we intend to address with our LandDuel product, which we expect to launch around Memorial Day in New Jersey this year. With our play, watch, bet esports strategy and first mover advantage, we believe we're in a unique position to capture the large and growing addressable market. On the online gambling side, the regulatory environment for esports remains very favorable as states continue to explore ways to fill the budget challenges that COVID has unfortunately created. There are currently over 20 states with some form of legal sports betting, and a number of state legislatures continue to look at the potential. EEG is currently the only esports-focused wagering platform with a U.S. state license. We plan to launch our Vibe platform in New Jersey this spring, early April. After that rollout, we'll explore market access for expansion into additional U.S. states. We also look forward to working with proposed new regulatory framework in Canada as provinces there begin to offer single event sports wagering in the near future. I'd like to walk through some of the operational highlights from the quarter. In December, our Esports Gaming League subsidiary re-signed its agreement with Arsenal Football Club to manage their Pro Evolution soccer roster. This is the second year of this partnership, and we value the opportunity to work with such a storied traditional sports brand in Europe and help them enter the world of esports. Also in December, we reached a multi-year agreement with the Philadelphia Eagles to be their exclusive esports tournament platform provider. EEG will host biannual Madden NFL sports tournaments for the Eagles. The Eagles joined the Philadelphia Union, the LA Kings, LA Galaxy, and Baltimore Ravens, which we signed just last week, as teams all who have joined our platform. As part of the agreement, the Eagles are now shareholders of Esports Esports Entertainment Group, which we think is a great testament to their belief in what we're building here at EEG. We remain in ongoing discussions with a large number of additional sporting franchises and anticipate further announcements in the coming months. During the past quarter, we've also announced the acquisition of Lucky Dino, an established licensed online casino operator with its own proprietary casino software platform. In addition to further strengthening our tech stack, what the Lucky Dino asset gives us is a substantial foothold in multiple new jurisdictions across Europe and Scandinavia, where esports are extremely popular. The 25,000 monthly active casino players create a tremendous cross-selling opportunity for our Sports Nation and Buy.bet betting platforms. The Lucky Dino transaction is a great blueprint for our strategy of acquiring profitable iGaming operators that provide us with strategic licenses, pools of players that we can efficiently cross-sell our other offerings into. We expect this transaction to close prior to the end of this month, February. Subsequent to the quarter's end, we have had a large number of exciting developments that I'd also like to detail for you. Market access continues to be a strategic priority for the company. In January, we announced that we have put Buy.bet and Sports Nation onto the company's multi-gaming license. This allows both brands to market into 150 additional jurisdictions for the first time. Our initial focus will be in South and Central America, Northern and Eastern Europe, together representing a multi-billion-dollar opportunity. As discussed earlier, we have submitted our gaming application to the State of New Jersey, Department of Gaming Enforcement, and plan to launch there this spring, late March, early April. This will make us the first company with an esports dedicated wagering platform available in the United States, should give us a first-mover advantage and enable us to build a strong brand around our Buy platform. Following our launch in New Jersey, we intend to explore as many additional states for expansions and the opportunities as possible. January 25th, we announced that we finalized terms around our previously announced acquisition of Helix and GG Circuit. This acquisition significantly bolsters our esports strategy with state-of-the-art esports entertainment centers, esports-focused vertical enterprise software business, and best-in-class esports analytics platform. And of course, in this acquisition comes our player versus player skill-based wagering platform, LandDuel. We expect this transaction to close in April, following the receipt of the shareholder approval. We've already begun integrating the assets and working on several exciting cross-company projects that will be announced shortly. All senior executives of both Helix and GG Circuit will be remaining with Esports Entertainment Group following the close of this transaction. Finally, today, as you've seen in the news, we've closed a $30 million financing round for new institutional investors at $15 a share. The use of proceeds for this transaction are to finance the Lucky Dino acquisition. We welcome the new shareholders aboard and thank them for their support. Finally, I want to close by thanking all of our employees for their hard work. We began 2020 on the OTC bulletin board with 10 employees and finished the year on the NASDAQ with over 75 employees. This is really a testament to the team we've pulled together, and I know that we have many more exciting milestones to come in 2021. I'm going to turn the call over now to our CFO, Dan Marks, who will walk through some of the financial performance in the quarter and our new upward revised full-year guidance. Dan?
Thank you, Grant. Good afternoon, everyone, and thanks again for joining us today. To begin with, I'm happy to say that the past quarter for the group was its first as a meaningfully revenue-generating company. We delivered $2.4 million of revenue in the quarter, principally from our flagship SportNation.bet brand in the UK, which is part of the Argyle Entertainment entity. This represents a $2.1 million increase over the prior quarter, which was materially impacted by our decision to pause marketing spend whilst we integrated a new customer affordability tool onto our platform, post-guidance given over the summer by the UK Gambling Commission. Across Q2, we took over $54 million in handle and had over 24,000 unique active players on our Argyle platform, materially up on the prior quarter. Revenues would actually have been circa $0.2 million higher were it not for unusually low hold on the casino product in December. As we look forward to the remainder of the fiscal year, revenue growth opportunities are abundant and will allow us to expand our current concentration outside of the UK. By the end of February, we will have launched both our Buy.bet and SportNation.com brands on our MGA license, allowing us access to operate our services in 150 jurisdictions. And as Grant mentioned previously, this brings with it substantial opportunities, both in widening the breadth of the markets we are in, as well as giving us the opportunity to cross-sell customers between our esports and sportsbook brands. Furthermore, several new revenue streams will be initiated in the coming months. The launch of the Vi.GG wagering platform on our New Jersey license in the spring, the hosting on our EGL tournament platform of several pro team sponsored esports tournaments in the coming weeks and months, and together with the impending closing of both the Lucky Dino transaction by the start of March and the GG Circuit Helix transaction during Q4. With the above in mind, our revised revenue guidance for fiscal year 2021, which includes the Lucky Dino acquisition, will be $18 million, and our revised guidance for fiscal 22, including both Lucky Dino and GG Circuit Helix, will be $70 million. Returning to the quarterly numbers, total operating loss for Q2 was $5.8 million, compared to an operating loss of $3.9 million in the prior quarter. Though Q2's figures were impacted by an equity-based compensation charge of $1.3 million and depreciation charges of $0.7 million. Total net loss for the period was $7.3 million compared to $1.8 million in the prior period. Though this quarter's net loss was compounded by an adverse delta of $2.1 million when compared to the prior quarter in the fair value of warrant liabilities. Operating expenses in the quarter totaled $8.1 million versus $4.1 million in Q1. Though those equity-based compensation and depreciation charges outlined previously drove a portion of those costs. Payroll increased quarter over quarter as we had 3 months worth of Argyle and Flip Sports employees on the books following the completion of their acquisitions during Q1. And sales and marketing expenses in Q2 were $1.9 million, an increase of $1.3 million over the prior period, as we reinitiated marketing spend on the SportNation.bet brand following the pause over the summer months. Moving on to the balance sheet and liquidity, we are very well capitalized to execute our growth plan and address our key priorities. As of December 31st, we had $5.6 million in available cash, but with the subsequent net proceeds from the sale of approximately 1.4 million shares issued for warrants exercised since the beginning of 2021, our cash on hand at the bank is now over $12 million. With the additional raise of $30 million via the financing round announced today, we are well funded to complete the upcoming Lucky Dino acquisition, as well as to fund our operational growth strategy going forward. Our current monthly net cash burn rate on operational activities is circa $0.9 million, but we'll reduce to $0.6 million post the closing of the Lucky Dino acquisition. And we will continue to be focused on finding efficiencies within our enlarged group's cost structure. As stated last quarter, we are confident our existing operational resources and cost base can support a doubling in customer activity in the next 6 to 12 months, while some incremental investment will continue in augmenting our tech function as we build out our Vi and EGL platforms. In summary, therefore, with revenue-generating activities having commenced, and with closing and impending closures of the EGL, Lucky Dino, and GG Circuit Helix acquisitions, together with the launch of new platforms in new jurisdictions, we remain extremely optimistic in our growth opportunities across the next 12 months, as we look to accelerate our development into becoming the most diversified esports online gambling company in the industry. And with that, please, can we now open the line for Q&A, operator?
We will now begin the question and answer session. To join the question queue, you may press star, then 1 on your telephone keypad. You will hear a tone acknowledging your request. If you are using a speakerphone, please pick up your handset before pressing any keys. To withdraw your question, please press star, then 2. We will pause for a moment as callers join the queue. The first question comes from Michael Kopinski with Noble Capital Markets. Please go ahead.
Thank you for taking the questions. I appreciate it. Just a couple of quick questions here. Regarding, you mentioned the stock-based compensation. Did I hear this right? It was $1.3 million, correct, in the quarter? And then depreciation was $370,000? I just want to make sure I got that right.
It was $1.3 million on equity base and $0.7 million on depreciation.
Okay, 0.7. Okay, gotcha. And then in terms of the cash, can you just kind of give us the net following the Lucky Dino acquisition? You mentioned that you had cash in hand of over $12 million, right? As the warrants were exercised. Can you just kind of give us what cash are you going to have in terms of after the Lucky Dino as you kind of ramp up to the Helix acquisition later in the fall? Because you have a $43 million acquisition there. And then if you can just give us a sense on the debt and equity composition at this point, if you have some thoughts on that.
Sure. Well, the financing round that closed today was specifically earmarked for the Lucky Dino acquisition.
Lucky Dino,
and
right.
The remaining cash on hand at bank will be used to fund operational activities, whether that be marketing or other expenses. Grant, I don't know if you want to speak specifically with regards to the GD Circuit financing.
Yeah, I can address that. I should add also, Michael, that even as we speak, warrant money over the past, as Dan already laid out, over the past 30 days has been coming in at an accelerated basis, and that is also true today. So these numbers are constantly in flux and rising as more cash comes into our accounts. That said, with GD Circuit Helix, we have already committed $2 million in funds to the transaction. Half the transaction, roughly $20 million, will be in equity, and the other half we are still determining whether it would be debt or equity. We have offers on both, and we're just looking to see what is in the best interest of the shareholders. But that decision will be made until we get closer to when they finish their audit. We get closer to closing, which will be end of March, early April.
Gotcha. And then can you just give us a sense on how Helix is performing? I know that you had indicated that you found a way for it to kind of break even in this environment through food sales and so forth. Where do you stand on the build out of the facilities? And because I understand that there was a couple of them that they were going to be building out, or is that on hold at this point, or can you just give us a sense on how Helix is performing?
Well, sure. In terms of the build out, of course, no additional physical locations have been brought online during COVID, nor will they until this is behind us. I can say we received good news over the weekend that with some of the loosening of restrictions, they were able to increase their attendance up to 50% and have been fully booked ever since that took place, as I say, just over the weekend. What you're referring to as well, where we were breaking even or close to break even prior to going up to 50%, was a combination of food, bev sales, as well as some of the software platforms that we have running in those facilities, which we'll talk more about in the coming weeks as we message the market as how we're generating additional revenue there. But to get directly to your question, have we been opening? No. Are there plans to open some additional facilities? Yes. I would imagine those will start to pick up again late summer, early fall. And those of you who have looked at what the facility looks like, the Patriot Place, we have started to talk with the other teams that we've entered into agreements with about a similar type of structure in their facilities. So we'll see how those progress. But again, that's not likely going to be a 2021 conversation. The additional facilities be coming online late 2021, more likely 2022.
Gotcha. And my last question is, obviously, this is a very active marketplace. Are there additional acquisitions that you have at this point that you're looking at, and what areas are you mostly focused on at this point?
Well, the answer to the question, the short answer is yes. We are constantly looking at it. I think we've messaged the market we're fairly aggressive when in our M&A program. We have multiple targets that are brought before us constantly from Occur, who's our consultants based out of the UK in the iGaming space, and how we determine whether or not we are going to proceed to engage in a letter of intent and go further. They have to be accretive, so obviously we don't want to have any and dilutive events? Second, what does it do for our other assets? If it's an iGaming company, it brings us, we just talked about in the report here, does it bring us access to markets we're currently not in? Does it bring us additional licenses, which opens up those markets not just for the other iGaming to cross-market into, but for the expansion of our esports? And on the esports-centric M&A, we're looking at opportunities where we can acquire unique software or unique elements that we currently don't have. With this acquisition, G-Circuit, Helix, Genji, etc., there's not many things that are left unaddressed in terms of our product mix. But we're always on the look for new technologies that will accelerate what we're doing with our business model. So I guess that's probably the best way to finish it. Yes, we are looking all the time. Yes, we have a full pipe. And when we make these decisions, they have to be more than just a plus one. It has to give us, outside of just increase our revenues, has to also give us an opportunity for additional synergies or unique technology.
Perfect. That's all I have for now. Thank you.
Our next question comes from Lisa Springer of Singular Research. Please go ahead.
Thank you, and thank you for taking my question. Given the large number of moving parts, I'm wondering how we should think about G&A in the second half of the year. I mean, how much of it in the second quarter was like a one-time deal because of M&A, and how much of it should we expect to be recurring?
Dan?
Yeah, hi Lisa. Without getting into too much granularity, I called out a couple of the numbers with regards to equity-based comp specifically that will not be recurring numbers or at least not to that magnitude in the second half of the year. So from that perspective, it's possible to model out what that might look like. Obviously, with Lucky Diner coming on, an EBITDA accretive acquisition, from a cash burn perspective, that those numbers should be coming down, as alluded to in the notes earlier.
Mm-hmm. Okay. And looking forward, what growth metrics do you think investors should focus on to measure your success? Would it be number of players, or what would you think would be the best metrics to look at?
Well, there's going to be...
Certainly...
Oh, sorry. Go ahead, Dan.
No, go on, Grant. I'll tackle at the end.
There's going to be a number of different, as you say, there's a lot of moving pieces here, so there'll be a number of different metrics. One will be the increased number of pro teams and franchises we connect with. This is the reason this is a key indicator is that these teams have huge fan bases. Some of these teams have fan bases in the 20 million range, and they will effectively be exclusive marketing partners of ours. So that will be an indicator, and that will trickle down to the number of fans that sign up. Another indicator will be on our ability to continue sourcing and closing accretive transactions. And these, of course, will have accelerated growth much more quickly than the organic growth we're going to get through signing up. And in addition to those, we are going to be launching the LandDuel product around Memorial Day, which is a completely new, groundbreaking type of wagering in esports. That one, once we launch that, we'll update the numbers once we get a better sense for how the initial proof of concept and the uptake, and again, that'll be closer to our fiscal year end.
Okay, great. Well, thank you.
This concludes the question and answer session. I would like to turn the conference back over to Mr. Johnson for any closing remarks.
Just that, thank you all for coming to our earnings call here and your continued support in the market. Jeff Cohen, our VP of Strategy and VP of IR, is available to address any other further questions you may have after this call. He can be reached through his email address. This is Jeff@Esports Entertainment Group. And, of course, Redchip, our IR company, is also happy to forward your questions to my or Jeff's attention. Thank you.
This concludes today's conference call. You may disconnect your lines. Thank you for participating and have a pleasant day.